Imagine investing $10,000 20 years ago. Two investors start with the exact same amount of money, but one chooses the S&P 500 while the other chooses the Nasdaq. Fast forward to today, and one of them has significantly more wealth than the other. But here's the surprising part. The investment that made more money isn't necessarily the one most financial experts would recommend for the average person. So, if you're wondering whether the S&P 500 or the Nasdaq is the better investment, stay with me because the answer may completely change how you think about investing. The S&P 500 is often considered the foundation of long-term investing. It tracks roughly 500 of the largest companies in the United States, including giants like Apple, Microsoft, Amazon, Morgan Chase, and Coca-Cola. What makes it attractive is its diversification. Instead of relying on one industry, you're investing across technology, healthcare, finance, consumer goods, energy, and many other sectors. This broad exposure helps reduce risk because if one sector struggles, others may continue performing well. That's why millions of investors view the S&P 500 as one of the most reliable ways to build wealth over time. The Nasdaq, on the other hand, is much more concentrated in technology and growth-focused companies. It includes many of the world's most innovative businesses, such as Apple, Microsoft, Nvidia, Amazon, Meta, and Tesla, because technology has driven much of the market's growth over the last decades. The Nasdaq has often delivered stronger returns than the S&P 500. However, there's a trade-off. Higher potential rewards usually come with higher risk. When technology stocks soar, the Nasdaq can significantly outperform. But when the tech sector struggles, it can experience much larger declines than the broader market. The easiest way to understand the difference is to think of the S&P 500 as a reliable family car and the Nasdaq as a high-performance sports car. The sports car may get you to your destination faster, but the journey is likely to be much more volatile. Throughout history, major market downturns have often hit technology stocks harder than the broader market. Many investors enjoy owning the Nasdaq when prices are rising rapidly, but during sharp corrections, they sometimes discover that they aren't comfortable with the level of risk they took on. That's why choosing an investment that matches your ability to stay invested during difficult times is often more important than chasing the highest possible returns. So, which one is better? The answer depends on your goals and risk tolerance. If you prefer broad diversification and a smoother investing experience, the S&P 500 is often the better choice. If you're willing to accept greater volatility in exchange for potentially higher growth, the Nasdaq may be more appealing. For many investors, a combination of both can provide a balance between stability and growth. Ultimately, the most important factor isn't whether you choose the S&P 500 or the Nasdaq. It's your ability to stay invested consistently for years or even decades. That's how compound growth works its magic and turns small investments into significant wealth over time. So if you had $10,000 to invest today, would you choose the S&P 500 or the Nasdaq? Let me know your answer.